Guys, hi, Crypto Sniper here. Coming back at you after a substantial pullback, falls into the range of round about all-time high of about 42k and dumped down to the low of upper 30s. So you're at 11,500 on about 42. It's kind of like 12 on 42. So that represents 2/7 if you want. 1 in 3.5. You're knocking on the door of around almost bigger than 25%, less than a third, which is natural. We got to catch up on a couple of things because just before that, it felt like we were going to get a final alt push, and we'll touch on the failure of the Ethereum to make a new all-time high, which we were inaccurate on. Let's just have a look at pullbacks generally. So this is inside our premium circle. I was just reminding guys of the natural nature of this particular gentleman. I don't know him, but thank you for his share. Credit to him. It's not my chart. Market corrections in bull markets. There he's just showing, and there's many of these floating around if you're into Bitcoin. So this is absolutely natural that this happens in any bull market. You unfortunately don't go up in straight lines. It happened to catch us as we were quite bullish Ethereum, which we'll get back into now. 38, 38, 33, 38, 36, 29. I've suggested that generally the overall corrections, in my view, will be less deep and take a little less long to shake out, but they are always deep and they always take a bit of time to shake out. So how you go forward, we'll cover as well. So just that little reminder on Bitcoin having a natural tendency to have to sell off. And to be fair, I counted the number of red candles that we had since our second most important squeeze on Bitcoin occurred there in that little squeezy. Since that break, in essence, on the weekly time frame, you had a tiny 1 week and a tiny second week. We're due a week. And more importantly, also during this period, the rate of ascent was becoming ever steeper. So we were covering more ground in less time, which is part of the natural process of acceleration. Everyone starts to get the trade and is chasing in, less concerned about price, can't afford not to be in. It's hitting the news, etc., etc. And we were trying to squeeze out an alt trade just as the Bitcoin correction. And this highlights something very important. Because in actual fact, people will always remember the things you get wrong, not all the things you got right on the way up. They'll remember what you got wrong or what got spoiled before it got finished, in essence. I still assess that Ethereum will make an all-time high, but it's going to take a lot longer now. And in terms of the stops you might have set for that trade, they would have been run. You may recall back down here, we had on the second most important HVF, as we call them, with the first being the huge first cup gold nugget trade. You may recall that in actual fact, Ethereum was set up quite flat and we thought it could even go down and we were set for trading that. The key mistake was the God market decided to go up and it was less clear that it was going to go down. It was quite possibly an up move, which it turned out to be. Everything we've done since then has been accurate because we apply the law of keep on keeping on. But it's at the bends where you're wrong, where you reassert up, or where you have your first correction. And I'm quite happy to be largely accurate on the accumulate on the upside, but you will always get caught. So the real value add is if you can occasionally catch one or two of those events. And we did know we were getting deeper into injury time before we got at least some semblance of approaching 30% correction, greater than 25%. Approaching to 30%. Now it's bugging me. I need to calculate what that correction was in the end. Let's get a calculator. How big was it? Calc. Do the maths, do the maths, do the maths. So it was 42k and we dropped to minus 30,000 and how much? What was the low? 420. So it was 11,580 correction and it was virtually the 42k was spot on. So the percentage is 27.6. percent. So that's it. So 27.6% is actually proving our hypothesis that it's not a 38% correction, which most of those others were that I showed you prior, to be largely true. You're still going to correct. People are still going to get more over exuberant, but the dip buying is going to come in that little bit faster. And it might take slightly less time to shake off. So you have a mourning period, a pain period, a slow, you've expanded volatility, it's super high, so now you've got to contract it back down again. So a little bit dull, a little bit up, a little bit down. We'll talk more about how we think you should be trading that later. But let's just carry on the drill down from the top down on the rate of change. So we knew we were getting close to the end, but we felt we'd get away with one more. And it's always that last drink that gets you into trouble at the bar, if you'll excuse the phrase, because things get leery or slightly out of hand afterwards. And whenever you're on all-time highs and you're milking it for one more time, in terms of Bitcoin valuation and everything, it gets let's get one more in. Let's get one more in. Too much bull bias then kicks in. So you can see, as again as I highlight this squeeze, the initial leg up from the low there was up at that rate. The next leg up until we rested again, we probably had quite a substantial sell-off at that point. We have to take that into account, was like that. And then from that low, we were going very, very steep. So the rate of ascent is starting to get a little too strong. It needs to reset that gradient by having another pause point. So we did get the key inflection points here on the way up as a next chance, an opportunity to leverage long, and it allowed us to build a great deal of Bitcoin. Didn't react hard enough to the fact that we've made our first target. We actually had popped out of our overperformance bands over here, so that was already highlighting that we're at localized high potential, and we went for that last drink at the bar, and then we crashed our car on the way home. So let's talk about what it does and the Ethereum element to this. The key problem that alt trading has, and why I'm more likely to be inaccurate on an alt call than a Bitcoin call, is the following. When you trade an alt, the God market is also a variable for your trade. So actually, Ethereum, still to this day, see it again, as it was set, was well set for upside. So if we take it back and we take you back into the discussion around that, whilst we were inaccurate and it didn't work out, that was a very good structure, and it began its journey. In actual fact, it began its journey quite encouragingly with good performance. We'll go into it a little bit more. And that was the key point there, and we made good progress. Problem when you split the screen is it's always reliant, and I said it at the time with YouTube as well, but we were hoping, and we know we have an extra point of failure. Let's get BTC on there. Splitting this screen is pretty helpful, because then you can see literally the point at which Bitcoin started to rest on the same time frame. What time frame are we up here? We're on Ethereum on the 1 hour, so let's get on the 1 hour here. Now there was another very interesting element to this that needs to be understood and appreciated, and that was also the fact that gold had started to sell off, and we'd stopped watching our anti-fiats. So a couple of mistakes. We'd stopped watching our anti-fiats. Now some of you are saying, gold had diverged, who cares about gold, who cares about silver? Well, the dollar went up because interest rates went up on bonds, and the traditional markets will immediately reflect that on the precious metals, and you're getting a bit of a delay on that before it shows on crypto. That's why. That's why it's interesting, and that's why the folks are with us, because we keep an eye on the traditional markets too. And we're not looking away. We're not taking our eyes off the ball normally, although we did in that instance because we'd got out of the habit of watching gold. It stopped there was an anti-correlation for a while. Bitcoin is just going bull, 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 and you're just focused on the crypto. And you keep having to go back up to the bigger time frames to remind you of those gradients of ascent climbing, to remind you that you well overperformed, you're in the overperformance band period. So when we're in your overperformance band period, it's no longer as stable when you're in your in-play zone of our macro pattern. So since the 27.5's run, you're going to continue to overperform, but the pullbacks will be wilder and stronger and can be more sustained. So you're in a broadening overall event where you've got much more space to swing around in wildly, while still in the net long run being a super bull. So if we have a look at here, this was the inflection point. Let's try get these days under perfectly with the same size. So over here, you had already kicked up on Ethereum. I'm going to let go of that indicator so we can get more of the chart. Here is where we were saying we'd already kicked up and the Ethereum was running. However, Bitcoin during this period was in this very uneasy square stall box. Now, initially it looked like it would hold its own. It wasn't super volatile. So that's why we felt we'll get away with that. Doesn't have to be an outperformer. It just has to hold its ground. And Ethereum started moving very, very nicely. We also noticed, if you allow me to put the eyeball back on the top chart, we also noticed that there was a grind line appearing. You'll learn more about our grind line theory on a program. Book a call below. Red line under there, it means it started to battle on its way up. And the reason for that is there's a bit of truck and trailer effect with Bitcoin. The truck has to come along with the trailer. It's actually often the main driver. And the fact that we wanted this to go up and it wasn't able to perform, it was just dragging along, was a concern. And then roughly here, you started to spill out of the ledge box that you had formed here after this 42 run. And this wasn't a violent rejection at the 42 run. In fact, we were supporting on a previous structure here along the lows on the Bitcoin. We had a bit of a funnel here and it was sitting on that funnel quite well. There were a couple of points where we should have got out sooner. I didn't get out soon enough. I didn't respond to this quickly enough. Part of the problem is it's inconvenient on Sunday nights. You're trying to relax. Market doesn't care what's convenient for you. And in actual fact, a key observation here is last pullback lows, 4th of January, also ended a low on a Monday morning. And there you ended up on a low on a Monday morning, spilling from the Sunday night into the Monday morning. So again, you're getting a seasonality of awareness there. You've got to watch a little bit. I generally think during the week we'll grind largely up, but it's going to be pretty calm. You can see a little bit of up. Now we're actually selling a little bit off again. There's some burnt fingers out there. No one's jumping in straight back in. And certainly in terms of the leverage. Another reason, trade very light leverage. And the further and the deeper you go into a leg before you've had a significant corrections, that's the 20% plus through to roughly what we got, 27.5. You've got to become selectively more cautious and more prone to just expect the next dip. If you've done that correctly and you played good defense, which I'm not going to give myself a high score for, I'll probably give myself 4 out of 10, 3 out of 10. I wore too much of this down, mainly because it caught us at the time it did, and I was relaxing a little bit. And I thought, so we get a bit numbed. Every dip has been a buy opportunity so far. And you forget that you're in the area where a bigger dip is now due. So every dip was a bit of a buy. When this happened and then you started to bounce, I was a little too calm. And Bitcoin is the one you have to watch when you're trading alts as much as the alt that you're trading. And unfortunately, Ethereum wasn't allowed to keep going up, even though it showed relative strength in the beginning. Once Bitcoin did that. Once Bitcoin did that, Ethereum was down. Although you still could have got out ahead of your entry, even though during that period Bitcoin was now in a downward trajectory. It set up a number of downside structures that then traded to the low side. We'll have a little look at those now. In fact, let's go back just to one chart, but you can see the key concept. falling grind lines over here, a steep one, then a shallower one, we break through that, and then a shallower still eventually leads to capitulation. So a couple of signs that the rate of ascent was tiring. The rate of ascent was tiring. You've actually had a big rolling convex top that needed to have a man pee off the roof to shake off the fluff of that grinding higher. This is the perpetual need for money to drip feed in and drive, but then you get moderate corrections, then it's drip feeding in at a slightly more flatter angle after initially chasing in real steep over here, and you get what I call falling grind lines. And it's a big setup for a strong correction, because eventually these buyers are a tad exhausted. That's illustrated by the 3 stages of dropping in the grind line, and then they're not there anymore with the bid, and there's a lot of profit takers, a lot of people standing on the same side of the ship. So kill that, and let's go back to one charterdom at a time. So I've got something interesting to show you on the Bitcoin fractals. Again, points that was underrated, and you always just think you've got enough time for a little bit more, but eventually that wolf, you can't cry wolf that many times, eventually the wolf does come. And in this essence, the wolf came. So a couple of observations that are quite interesting here for you on Bitcoin and how everything went down. So we had a very low volatility squeeze up in a rising wedge. Now, I want to put an indicator back on here, and this is your volatility, historical volatility indicator. I'm going to highlight to you. As you get closer to the higher point, you get more super spikes. You also get a bump in the volatility. And I was highlighting earlier to premium guys how this was a first warning of a red top over here. So here you got a bump in the volatility. I want it to be, that's your first warning there, as you can see it. And then you get the rollover that started there. Now you get a double, kind of like a double top, but the second one not as high. So it's an attempt. So you actually usually, it's kind of like a descending triangle, 2 loops on a descending triangle. So let's just draw that better for you. So up she goes, and then down. Up she goes, and then down, but not as high the second time. And then you get your first spill. And then you get your buying, but it's not as strong as it was. It wasn't able to keep it up there, but it's now trying to hold a new line. And you get your first inverted in a new trend, and you get overperformance into the low. There, bang. Then you get a wind up of a upside HVF that is what we'd call a retrospective draw, and up she goes, she crawls. She crawls up the wall of worry, and you're out of your transgender pink flagging area. So you get this whole hyper period of pullback and volatility that then pinches back down in terms of volatility, and then you start your crawl back up. This is what we had. We had a similar situation here, only this is more of a broadening structure overall. You get your 2 touches warning increase in the volatility again, and this is what we missed. So always do a debrief and a post-mortem if you've left money on the table that you could have banked more of. It's in the mistakes that you get your biggest learnings, and I'm doing a live effective debrief for you to take out, get the takeout of where we were wrong on thinking we had more time with Bitcoin in this box. In actual fact, we were at the last drinks before closing time in terms of this particular move. Again, couple of highs in there. You'll see if I do it on a lower time frame that there's actually a couple of highs there, and then the first pullback there, a little bit choppy, can't get held. Then you get a moderate sell-off first. Nothing alarming. You've sat through that. You've sat through that. You know, initially nothing alarming, because the buyers that have been trained to come in again. So you had a little bit of support there. Whoops, let's draw it again. A little bit of support there. You work your way back up, and then you're getting this weak grinding buying coming under here, holding a flat line. Now you've spilled out of what we refer to that as a grind line ascending along the base. And you then get this, again, little fractal squeeze. The tiniest fractal squeeze, that's the best inverted HVF that you never took. And I don't want to short in this market, because I think to get these right, you're going to be very clever, and you're going to have to be very clever. And if you're wrong, you're going to regularly scalp losses. And if Bitcoin's super strong out of that, this is where I was actually expecting Bitcoin to move up, and it popped down. And with retrospective analysis, the benefit of hindsight, you can actually see some of the pattern DNA in terms of how this repeated. So you have up leg, you get more volatility, you get a bit of a compression down with a few cells, you get a final high after the volatility starts to climb, so you thrash around and then you get an exhaustive final high, then you get a holding point to buy the dip, and then you get your spill. And then the rest is recovery. The rest is recovery. In other words, this down leg here is probably, or that one, very similar to where we are right now in terms of my worldview. So dips should be bought, but you want to catch the low. That would have looked like a good dip supporting on one of our funnels. That would have looked like a good dip supporting on a key round number, 33. But it kept going, this one, because it had a lot more pent up leverage that needed clearing out. FOMO, and it had gone really, really steep, and there was that, the final surge into there, as you get the final surge, and there was the expansion and the volatility away from the normal highs. You can almost cut the line here on the volatility measure, and then the spill also can give you high volatility. You got it moderately high here, but you didn't break that level. This was a proper spill. It was a real thriller from Manila, a proper spiller, and it went right the way, and then you've really spiked your vol super high on this. So this is already starting to dissipate, because the snapback the other way, it's starting to come back into normal levels. A little bit sell-offy at the moment, but I'm expecting this to claw its way probably. I'm not suggesting that it'll be this quick, by the way. I would expect this angle to flatten relative to that for a bit. But it could be approximately the same. It could be more like that, even broadened out a little bit more. Time will tell. Being a bigger sell might need a little bit more time in terms of where it was. So actually, as we were getting pumped for Ethereum setup, which was very well set up, this little bastard was our point of failure, and it's that you're actually trading two tokens when you trade alts. You're trading the alt you're trading, and you're also trading Bitcoin. And you've got to, unfortunately, have eyes in both directions. And Bitcoin had just been so consistently strong, not particularly thrashy, hanging fairly stably, which maybe should have concerned us some more in a box like that, and was actually just ready to let go. And we picked the moment perfectly, so it made a mug out of us. But that's okay. You're going to have two wrong trades at the beginning and at the end. If you can get the continuation trades all correct in the middle, you're doing okay. In this sense, I'd still like to think that I can do a lot better than that. And I wasn't watching closely enough on the Bitcoin market. And we've got to always remember the context. We haven't had 25%er. It's a good one to get out the way, and it will take a little bit longer by some way than this one did to recover from its low until it was, working its way back. There wasn't a particularly lengthy period. So we'll have to see. Could it trade lower? Now, there's the slight threat. I'll mention it, but I don't rate it too highly, but it can suddenly increase its probability of occurrence depending on price behavior. So I can draw that, ignore this red line now for now, and you could effectively also have a right shoulder. Now, already this is traded higher than the left shoulder high. Generally, I prefer to see head and shoulders with a softer right, but it has to be said the momentum down was pretty brutal. It was faster than the momentum up. There is a neckline zone roundabout through here. This would be a very significant pattern if it were to perform, remember, just because you can draw a head and shoulders, A, doesn't mean it's going to turn into a head and shoulders, particularly in the macro bull. B, it doesn't mean it might break, but it doesn't mean it absolutely guaranteed to make target either. So you can, this would take you from around 42 down to, what's our level here? I'll do a rough sketch. Again, I don't want to spend too much time on this, because until we start coming back down fully to around this level again, 30,000, 31,000, till we come back down to the 31,000, I wouldn't take it too seriously. It's coming down at the moment, but it's got some ground to cover. It's likely to be a little bit churny. If we came down really hard and fast down to the 31,000, this is quite a thin vertical shoulder. In other words, it does this. It continues this kind of candle. You know, maybe a small bounce, bump, and then down hard, coming really hard, where this is a more broader shoulder. This one turns into a far more angular, acute one. If we were to do that, we have a next level of potential concern surrounding the 42 to 31. You would have quite an ugly target projected. You'd have around 11 grand, pushing you from 31 down to 20. I've seen it, I'm not expecting it, but it's got a technical existence, and if we show more weakness, that 5% quickly becomes a 35% if we're throwing it down, and by the time we get back down to 31,000 with a very strong assegai down leg, you have to treat it more feasibly. So there's a little warning shot for you. Overall, I would probably say the scenarios I'm seeing more likely for now, and that will change. So there's this live dynamic probability meter that is just moving all the time depending on whatever's happening at the moment. So you can only speak about something at one specific point in time and acknowledge the other threats, and then as you get new news, new information, you continue to update. I'm more in this camp, although it could be that in this instance, having been our first meaningful 30 plus that we make, you know, we struggle up here, not too quickly, and we have another spell of down leg, and then we set up a macro continuation. I'd quite like that, but it means it's going to be a bit of a iffy and slightly dull market for a while we wait for that all to transpire. You'll have a little bit of minor ups and downs, and most people that are traders will not gain money out of that because they're trading the move and the breakout, not the range. And what you'll actually get is range and range compression. If you're a range trader and you were selling the highs, buying back the moderate lows, the moderate highs, the moderate lows, and then even more moderate highs, slightly tighter, and then buying them more, you'd be smart. But most people don't do that. Most people are trading a move. So this is going to take Bitcoin off people if it happens in the process of setting up that, if that scenario is what occurs. Don't forget, this could be very flat top and highly ascending. It could be like that. If it was super bullish and everyone starts to get back on their boat again, Biden talks of, you know, extra money. It could also be a bit flat bottomed if there's still some selling out there, so you could be more there and you could have a steeper, which keeps you guessing a little bit more, because could it be a structure to first squeeze out the bottom? I kind of hope it doesn't do that, because it's a little bit ambiguous. You can sometimes sell off a bit first, not make the target to the downside, and then run to the upside. That messes a lot of people around, because you're guessing and which way it's going to go, and you don't have a clear map, and B, when it does go, you don't have high conviction that it's going to do what you want it to do. It's almost best for most of these market circumstances to not do much trading. Going back to the Ethereum call that never worked out now for the long side, and owning that mistake, is remember, the bulk of your best trading is happening on Bitcoin. I said it when I said ETH. The bulk of my money that's been made on leverage is made on trading the Bitcoin. The bulk of it. It truly is for me. Because of that second leg of potential failure, that second point of weakness that you get. I would say that second point of weakness is very critical, particularly when you're getting later in the bull market. Remember, Bitcoin's run first, it's run further because it's the lead steer. So the lead steers run harder, further, faster, for longer. He's going to be exhausted just as some of the middling of the herd are still got a bit of juice in their legs left. But unfortunately, he spoils it for everyone. He stops, the whole lot stops. That's what the principle of God market and what we talk about to a great deal. So this is going to be a little bit like this period. It's not going to be a trading market. The best thing you could do is do no damage during this period. How many people would have made money in that? Long, short, long, short, long, short, churn still roughly in the same place that you were after a bunch of round tripping. And I think that's what you're going to get here. If you chase this in and short it, you're going to get a snapback rally. You'll get hammers like that potentially coming soon. And then you'll be back up here and you essentially will have started there and you'll be back there, having gone a bit up, having gone a bit down, having gone a bit in every direction. So these are all activities that are non-value adding in terms of your gaining of Bitcoin. Remember, you should be valuing yourself in terms of Ethereum, Bitcoin, gold, silver, etc. So overall, this is a non-trading market now. If you're an investor, which you should be, if you're a trader, you should never just be a trader and not be an investor. If you're an investor, this is a nice monthly accumulate. So you should have your monthly accumulate. You're watching this thing sell off. Come on down. It's good news for me. That's sat stacking your cash flow out of your business, your activities, your salary, your wages. Sat stacking. Doesn't matter if it's 0.501. Stack those sats on your investment pot and keep doing so. Keep doing so, and do the same, by the way, for your gold and silver. So the point of gold and silver gave you the early warning. We'll come to the Ethereum chart, but I want to just also bring in the metals now and the anti-fiats and the fact that you do 360-degree analysis, but then once you start homing in on a trade, you start just looking through the sniper scope. You don't spot an enemy over there because you're looking hungry for that shot on the general that is in your firing zone. Your spotters stop keeping eyesight on line of left and right, so you've got to maintain your 360 degree, and we wound that a bit back as well. So imperfect, very imperfect as humans, very imperfect execution given late stage of bull market. Now here's gold, and this is what's happened. Now, I know you'll all go, gold isn't Bitcoin, crypto isn't Bitcoin. Yeah. The bonds started to go up. So this is going to get a little bit reset like. But you can see Bitcoin's busy selling off. What's happening with gold? It's selling off. Why? Well, let's take a look at the dollar. And this is where the 360-degree analysis truly comes in and where we'd slowed down on that. Dollar's trading up. It's actually in a flag and it's going to possibly pop up. Oh, that's going to be important news and information. In fact, what if we have a look at the dollar more importantly, and I'll give you a little bit of an idea of the kind of discussions we've been having in premium. Falling wedge on the dollar index. Falling wedge on the dollar index. Everybody is all dollar to zero. No, I'm sorry, that's the Peter Schiff punt, but he also hates Bitcoin, remember. This isn't zero. Zero against what? All the others are pieces of crap too. Yes, there's more dollars being created, but the whole debt system, a lot of what Ben Johnson says still holds value, even though we're not showing the strength yet. But we talk about three impulses in here. You've got 1, 2, and you're making your third. You're going to go 3 in here and roll over. Then let's break out to the upside. More likely. Could it be a meltdown through the downside? Yes, we teach you about wedge theory. And you can get the rhyme and verse on it. Again, book a call below to understand that further. Grab the mini series if you've got absolutely no money. We have a self-study which is cheaper just for watching, and you still get a Sunday session. So the USD try, let's go have a look at this. Very similar structure to this, all because it's based a large part on weak currencies, falling wedge. So we're getting into traditional markets here. And what's happening? Hold on a minute. You're popping out of that wedge. That's on a... do it like that. So actually a sign of dollar strength. Why is the dollar getting strong? Because the bonds are falling. People don't want the debt anymore. Therefore, the yield they're getting, the interest rate paid to them is going up. So holding gold that earns no interest versus holding a bond that pays some interest, some must start just slipping a little bit out of the metals. And what does that happen? Well, if you're trading gold and silver, you're mainly getting it into for the protection and the appreciation against fiat. Now, there will come a point where it doesn't matter what interest rate they pay. People aren't going to buy the debt because they see the debt going to zero. It's too goddamn big. The Fed is already the biggest buyer of their own debt. So that's consuming their own crap, which is not a meal that I'm particularly excited about. And no one else will eat it because it's crap. And so that eventually it doesn't matter if you're paying 100% on peanut shells. When you've got a driveway full of peanut shells and you don't value them particularly anyway, you don't know what to do with them, you'd further have silver coins, gold coins, and Bitcoin. And the fact that they're not paying any yield becomes no longer of interesting. But for now, they're still playing that game. So if the yields go up on the bonds, they're paying a little bit more. Holding something that pays no yield, that's also correct, can sell off. So that's why you're seeing gold going right now. And you're actually seeing the dollar working its way up out of the Turkish lira. Again, falling wedge break right here. So there's a little bit of signs that the dollar isn't going to be so easy. We've had your HVF period with the dollar killing itself, jumping off buildings for you, so that you could buy Bitcoin against an ever depreciating dollar. Yes, Bitcoin was going up a lot and the dollar wasn't going down in percentage terms near as much, but it was a tailwind. Now you've got a possible headwind. So guess what? You aren't going to go up as quick in the dollar terms. But hold on, you'll go up pretty well in euro terms because you're going to start getting a euro headwind. So it depends where you live. BTC euro will look a nicer chart now for a while. BTC try, way, that's the trade of the year, you know. Maybe even Ethereum try. So let's go back to the cryptos, having taken you on a roundabout tour. So Ethereum, let's go Ethereum here first. So quite a strong sell-off, and let's cover it. Let's get into it. Selling off again now. Let's get down the time frames. So yeah, here was the low out of this. Eventually this grind line was broken. You can actually see the fractal. When I see it in retrospect, I'm like, what was I? Why? We were here, by the way, when we were bullish, and then it got later in the night. And the next day. So this was Saturday night and that was Sunday evening. This was a warning sign when we broke down through that. Through the grind line, it's sitting on there, the fractal, boom, return move. That was your second chance to get out once it's shown that it's weakness and it's breaking out of what was, in essence, a rising wedge. So execution, once things started to go badly, was poor. Should have been out over here, and if not, caught the rebound and got out. So coulda, shoulda, woulda, it doesn't matter. We're learning. Is this going to be a head and shoulder? Bit of a deep shoulder now on the cryptos over there. Deep shoulder. Will it run that low? I prefer it not to. It would have to start reversing pretty soon and snap back. So Ethereum now looking a little bit soft. What happened to the Ethereum BTC? Well, the Ethereum BTC, take it back up, is at that critical level where it's been sold off before. 33. Sold off, came down, it reversed, it got support here and reversed, came back up, and this was as Ethereum was running, so it was looking great. Then the Bitcoin collapsed. When Bitcoin collapsed, unfortunately, what then ended up happening is your very special alt trade, when Bitcoin is collapsing, will collapse further faster because it relies on Bitcoin staying up. This is the problem you have with the God market, and this is why I talk about that second joint of possible failure in your structure. And as a result, this reverses back down. Important point, however, is it didn't to the lows run the lows here, but it's coming off now. How far? We wonder. It will come down to how far Bitcoin falls. If Bitcoin stabilizes, you could have a nice upside squeeze from your 33, and if you remember this level, it was a neckline for a head and shoulder we did call, so we got a lot. The guys will always remind us about our wrong trades. It's okay. Wrong is feedback. That's all. And right is also just feedback. Which doesn't mean you're a god. It just means your view at that time was well orchestrated. And it's more important how you execute on it. You could have actually got out and not lost any money, and that would have been great execution for not losing when wrong. That's actually a better thing, because there's some people that don't make what they should make when right. So don't get too hung up on the wrong and right. It's how you execute on your platform. So there was the neckline of that head and shoulder. That's been resistance here. This is FBTC we're talking about now. Here, here, and there. So the question now becomes, are we going to do that, an ascending one or an isometrical one, and squeeze? And is that just going to be part of the healing cycle? We're going to hold this low, calm down, flatten out, and then get going again, which will imply Bitcoin is actually firm. Remember, we need him to be decent and clawing his way back. Or could it actually turn out to be a deeper dip and it goes the other way? That's going to start to put a big problem under our right shoulder narrative, because the right shoulder should never get too squared up and too goddamn bulky that it disproportionately scales against the left shoulder. We'll take a look at the left shoulder as a reminder again. So that could have a risk of being one more test to the downside as well. At the moment, I'm going to bias to bull. I think we're not going to have too terrible a time. I think Bitcoin, I think it's largely based out, and that the current selling that's going on right now will probably abate a little bit, and then there'll be some movement back up, and it's going to stay in that 33 to 36, 37 zone for a while, working its way slowly back. And I think that's going to allow this to come up. So despite us being near lows, I'm not pushing for the down leg. However, I could actually, I'm second guessing the future, could absolutely be wrong. And if we are to be wrong, this then brings into question this whole very lengthy period of build up that we've had on the FBTC. So that was the big commencement of the shoulder on that orange box, and that officially is the conclusion, although it had a little hiccup dip and rally. So you could argue, okay, we'll count that in. So in terms of time frame, you're talking between there and there. So it's 2/3 of August to March, quite lengthy. We can measure it more accurately than that and say 4th of September it is actually, to 24th of Feb. So it's all of February, all of January, September, October, November, December. It's quite lengthy still. So it's 6 months, a shoulder. How deep into this one are we? Isn't it ironic? September. The other one's 4th of September, this one's 1st of September. It's very ironic. So when did this turn? That's nice and easy then, because this is 24th of Feb. So the one that was the 4th of September turned by the 24th of Feb. This should be done by the 20th of Feb. Back up to the 4 mark, in other words there. To be the same scale. That's not to say it's going to be the exact same scale. Could be a bit shorter, could be a bit longer, but that would make it the same scale. Starts to become a concern to me if it gets much, much longer. It already did dip a little deeper, but that highlights a little bit of the volatility we've had in the power of BTC in its initial move. So I can explain that one away fundamentally for a bit, but then I'd need to see some sign of that strength and not dying at the 33. Is this just going to be another die at the 33? And then this bloats beyond that date. A little bit of a spoiler. Could be a little bit spoiler, and then still come up and still work. Just have a very lengthy right shoulder, but it would have then had a deeper and longer right shoulder. Possible if BTC is going to be really strong. So nothing is taken off the table there, but there's a decision that's coming here, up or down. And it's too early for me to commit strongly. I'll still give Ethereum a chance, but it's relying on Bitcoin being strong. The irony is Ethereum to be strong needs Bitcoin to be strong, because Bitcoin is the bellwether of all money coming in. So quite a lot spoken of there and brought into the mix. Dollar, 360-degree analysis, churn. You know, this could make a little fractalized head and shoulder and rally again here. I wouldn't trust a little fractal of a head and shoulder. So I wouldn't be trading short during this period. If you wanted to have been short, you would have had to be A, brave. I'm not planning on doing that very often in this hyper bull market. But let me just say the risk reward ratio on that was phenomenal. You know, that was your entry short on fractal. That's where you could have put your stop. And that thing just ran. It just ran and ran and ran. So from a shorter's perspective, that was just unbelievable trade. Had you got it. I'm not actually hung up on getting that. We were hoping it was going to go the other way. Good. What else have I got for you? Total. Let's have a look at the total market cap. Yep, so it took me a little bit off highs, by some degree, being slow on the uptake here. Regret the incorrect call in the end. It did all it's set out to do until suddenly it was stopped. This is going to have a lot of a Ethereum-y type feel to it and a Bitcoin type feel to it as the two biggest tokens. Yeah. I would argue there was probably a target made on a final structure here that just made target, and that's why we've failed as well. You can see this setup. Good. I think that's all, guys. Nibble away at the Bitcoin market. Total 2. This is Ethereum. Sorry, it's total 2. This is very much Ethereum and the alts, but Ethereum is the biggest. Total is the one above. There, that's got much more of Bitcoin in it and looks a lot more similar. Although, as you can see, it did bleed up a little bit because of the alts, even though Bitcoin was in a box there. So the alts were just didn't get away before Bitcoin died. Yeah. And it looks like now the alts are running into the most pain. They're selling off. Yeah, good. So we've covered dollar strengthening, going to be a problem. We covered gold and silver weakening because of yields coming back on bonds. An anti-fiat family member again having after just looking like it was going to get away, getting stomped on. I wonder to what degree the dollar weakness that we got out of the dollar. Remember the market's price in. The market's price in 6 months ahead. And these guys know stuff. You can see the strengths coming in on the dollar here. The dollar longs are going to be the trades for a while. To what extent the control structures of the world already had the playbook that Biden was going to get in. When we had the super strength, they said, guys, Biden's getting in and he's going to print like an absolute, I don't know what to say. He's just going to print a whole bunch. Let me not use colorful phrases. And that was baked in. And the city guys, the Soros funds, all these guys that are writing the script, that were controlling the voting machines, said, we've got this. Biden gets in. It's communism. We're printing for everybody except white males, Latinos, Americanos, etc., women, small business, whatever. We're going to divide and conquer, because nothing brings unity and prevents resentment than doing stuff like that, you know. So that's what's going to happen. And this looks like the dollar was adjusting for that eventuality already. Now it's a fact. Sell on the rumor. The insiders had the rumor as fact. For us, it wasn't even a rumor. We didn't even know about it. But whispering in the central banks Biden was always the favorite. They made it happen. They made it happen on the odds, bookies makers. And now it's happened. Rally. Because it's expected and it's priced in. So actually, this is the damage of a higher level of printing being done, and maybe it's priced in already. And the European nations are now squeaking because of their high value of their euro. So let's have a look at the euro USD. So this is a full-on wrap on all things FX and crypto here as to why. 1.25, big, detailed, structural level for the euro. You can see it here. $1.25. Run, just run, just run. Spilled through when he said do whatever it takes. Now resistance. And before you're getting to that level, rising wedge. Boom, boom, boom. Do not be long the euro. Dollar to show some strength potentially. This to come back into this new reality range that is somewhere between there and there. Back down into the middle. Bit of a shooting star there. We can take the eye off. Bit of a blow off and then coming down. And you've got the dollar long at the moment. That's it. So watch your lira, your rubles, your rands. Expect those all to start losing value again. Could cause early debt problems. And we're going to have a different trade. It's going to be more on emergings now getting hammered. Dollar being firmer, slower upside Bitcoin when it eventually shakes its head, longer period to shake its head. Gold and silver, extension, longer period to shake its head before it gets back and going because of dollar headwinds. But in euro terms, gold and silver ounces probably still fairly well, and Bitcoin. But Bitcoin needs to shake its head a bit after what its hangover a little bit. And in time we'll see whether Ethereum is an upside break and we're getting back to the bull cycle, but just in a more moderated, slowly catch the monkey slow rate, and then we'll get faster again, and then we'll get super fast again, and this time we're going to try and make sure that we're cashing in our chips before the last drinks are called. That's it. Okay guys, thanks for watching. There's your heads up on all things macro surrounding crypto, gold and silver, dollar strength, and emerging currencies. By the way, dollar strength and increase in interest rates, not good for final parting shot, stinky stoink market as well. Could see eventually that start to trickle through into the likes of Tesla, and all those other equities. So you're getting quite a lot of possible circumstances that could come out of this. This is on a monthly. Watch that weekly chart. We could start seeing a little bit more pressure on the stock market. Okay, thanks for watching, and we'll catch up with you again soon. And regrets the trade didn't work out in that instance. There were more points of failure. We warned of that, and we did say Bitcoin would have to play the game. We felt it was. In hindsight, looking at it, now I feel stupid. But the debrief and the learning will make sure that next time we're accurate. That's how it goes. You get a couple right, you start to get a few right, you get confidence, you start to think too much of yourself, you stop doing your basics, and then you've got to go around and repeat the cycle. And that's trading. And it never stops, no matter how long you've been doing it. You've got to keep checking your ego, keep checking your overconfidence calls. Okay, bye.